Welcome back to Djji Tutorials. Today we are talking about borrowing money, which means getting funds from someone else, like a bank, with a promise to pay it back later, plus a fee called interest. People borrow for big purchases, education, emergencies, or to start a business. Lenders charge interest, which is the cost of borrowing and how they make a profit. You repay the original amount, the principal, plus interest. Common ways to borrow include credit cards, loans, and mortgages, each with different rules and costs. Borrowing is a legal contract. You must repay as agreed, or you risk damaging your credit score. Only borrow what you can afford to pay back. Always understand the terms before signing. Borrowing can help you reach goals faster, but it's a serious responsibility. Use it wisely as a financial tool. Make informed decisions to protect your financial future. Interest is the price you pay to borrow money, and it comes in two main types, simple and compound. Simple interest is calculated only on the original amount borrowed, the principal, so it's easy to predict your total cost. The formula interest equals sign, principal x rate x time. For example, borrowing $1,000 at 5% simple interest for 3 years costs $150 in interest. Compound interest is more common and is calculated on both the principal and any accumulated interest. This means you pay interest on your interest, so the total grows faster. The more often it's compounded, the more you'll pay. The formula total amount equals sign, principal x, 1 plus rate compounds per year. Compounds per year x years. Using the same $1,000 at 5% compounded annually for 3 years, you'd pay about $157.63 in interest. Compound interest can work for you in savings, but against you in loans. Always check which type applies before borrowing. When borrowing, compare your options. Interest rates, loan terms, and fees all matter. A lower rate isn't always cheaper if the loan lasts longer. Example, you want to borrow $5,000 for a car. Loan A 6% simple interest for 4 years. Total interest, $1,200. Total repayment, $6,200. Loan B, 5% compound interest, compounded annually for 4 years. Total repayment, about $6,077.53. Loan B saves you about $122, even though the rate difference seems small. Always calculate the total repayment, not just the monthly payment or interest rate. Don't be fooled by a lower rate alone. Do the math. Choose the loan that costs you less overall. Smart comparisons save you money. For big purchases like cars or homes, you'll usually need a down payment, your own money paid up front. A down payment reduces the amount you need to borrow. Example, buy a $20,000 car, put down $4,000, and only borrow $16,000. The formula loan amount equals sign, total price down payment. Bigger down payments mean smaller loans, lower monthly payments, and less total interest. For mortgages, putting down 20% or more can help you avoid extra fees like private mortgage insurance, PMI. Example, $25,000 car, $5,000 down, 20%, borrow $20,000. Your friend puts down $2,500, 10%, borrows $22,500 and pays more interest. Saving for a larger down payment can save you thousands over time. The more you pay up front, the less you owe, and the less you pay in interest. Plan ahead and save before making big purchases. Let's break down common borrowing tools. Credit cards offer convenience but have high compounded interest rates. Pay your balance in full to avoid costly debt. Mortgages let you buy a home without saving the full price, usually at lower rates, but you'll pay a lot in interest over decades. Loans, like car, student, or personal loans, give you a lump sum to repay in set installments with interest and sometimes fees. Example, a $10,000 personal loan at 8% for 5 years costs over $2,000 in interest. Always know the total cost before borrowing. Understand the terms, interest type, and repayment schedule. Borrowing can help you reach goals, but only if you use it wisely. Read the fine print, do the math, and borrow responsibly. Hope you find this information useful. Please share with your classmates. See you next time.